Welcome back to XRP Insider, everyone. Today we are diving into one of the most important moments for the crypto market this week, as Bitcoin, Ethereum, and XRP are all trying to recover from recent pressure, while traders across the world shift their attention toward the upcoming Federal Reserve minutes. Right now, the entire market feels like it is standing at a crossroads. Bitcoin is holding above a critical support zone near $77,000 after dropping from its recent highs. Ethereum is attempting to stabilize above the $2,100 level, and XRP is once again showing signs of life as retail traders slowly step back into the market. But the big question everybody is asking tonight is simple. Can crypto finally build momentum again, or is this just another temporary bounce before another wave of selling pressure hits the market? Investors are closely watching every move from the Fed because inflation concerns, interest rate uncertainty, and geopolitical tensions are all creating a dangerous environment for risk assets. And right now, crypto traders know that one surprise from the Fed minutes could completely change market direction in the coming days. As we move deeper into this trading week, Bitcoin continues to hold one of the most important psychological levels on the chart. The world's largest cryptocurrency is trading around $77,000 after experiencing a sharp pullback from the recent May peak near $82,500. Even though bulls have managed to defend support so far, the market still looks nervous. Traders are being extremely cautious because the Federal Reserve is preparing to release the minutes from its April FOMC meeting, and investors want clues about where monetary policy is heading next. The Fed decided to keep interest rates unchanged between 3.5 and 3.75%, but the real concern is whether officials are becoming more hawkish behind the scenes. Inflation data from April came in hotter than expected, and that has already started creating fear that interest rates could remain higher for longer. For crypto markets, that matters because higher rates usually reduce investor appetite for risk assets like Bitcoin and altcoins. So even though Bitcoin is still holding support, many traders are refusing to open aggressive new positions until they hear exactly what the Fed has to say. What makes this situation even more interesting is the growing speculation surrounding the Fed's future policy direction under Chair Kevin Warsh. Investors are searching for any signal that could reveal whether the central bank is leaning toward future rate hikes or maintaining its current stance for longer than expected. According to market data from the CME FedWatch tool, traders are currently pricing in almost a 97% probability that rates will remain unchanged during the next review cycle in June. However, that does not mean markets are relaxed. In fact, fears surrounding inflation and macroeconomic instability continue to rise, especially with geopolitical tensions involving the United States and Iran, creating uncertainty across global financial markets. These concerns are causing many investors to rethink their short-term crypto exposure. If inflation continues rising and the Fed signals that tighter policy may continue into late 2026, that could put additional pressure on Bitcoin and the broader crypto market. This is why traders are being extremely selective right now. Everybody wants confirmation before making major moves, and until the Fed minutes are released, volatility could remain elevated across the board. At the same time, one of the biggest warning signs for Bitcoin right now is the decline in futures open interest. Recent data shows that Bitcoin futures open interest dropped to around $56.29 billion, down from more than $57 billion just one day earlier, and significantly lower than the monthly peak of over $64 billion reached earlier this month. This decline tells us something very important about current market psychology. Traders are becoming less confident about Bitcoin's ability to maintain strong upside momentum in the short term. When open interest falls, it usually means fewer traders are opening new leveraged positions, and that often reflects uncertainty or fear. In many cases, this kind of environment can lead to slower price action and weaker rallies because the market lacks aggressive buying conviction. However, some analysts also believe this cooling-off period could actually be healthy for Bitcoin. After all, overheated leverage often creates unstable conditions that lead to violent liquidations. So while declining open interest may look bearish at first glance, some traders think it could eventually help Bitcoin establish a more sustainable foundation for the next major move higher. Technically speaking, Bitcoin still finds itself trapped in a difficult position. The price is currently trading below the 200-day exponential moving average, near $81,600, which continues acting as strong resistance for bulls. As long as Bitcoin remains below that level, many analysts believe the broader market structure remains neutral to bearish. However, there are still signs of resilience underneath the surface. The 50-day and 100-day exponential moving averages are sitting very close together around the $76,800 region, creating an important support cluster directly beneath the current price. If bulls can successfully defend that zone, Bitcoin may still have a chance to recover momentum. Momentum indicators, however, continue showing mixed signals. The MACD histogram remains negative, suggesting bearish pressure is still active, while the relative strength index remains below the neutral 50 level. But interestingly, the money flow index is beginning to show oversold conditions, which may indicate that sellers are slowly losing strength. This combination creates a fascinating setup because it suggests the market could be preparing for a possible rebound if buyers regain confidence after the Fed announcement. Meanwhile, Ethereum is quietly beginning to attract attention again as buyers step in around the $2,100 area. Unlike Bitcoin, Ethereum futures open interest actually increased slightly over the past couple of days, rising from around $30.73 billion earlier this week to approximately $31.5 billion today. That increase may seem small at first glance, but it reveals that traders are gradually becoming more interested in Ethereum derivatives again. Many investors believe Ethereum could outperform if the crypto market stabilizes because the network continues benefiting from strong ecosystem activity, growing institutional attention, and long-term confidence surrounding decentralized finance and tokenization. Still, Ethereum is far from being out of danger. The asset remains under heavy technical pressure after falling below several key moving averages, and traders know that any sign of renewed weakness in Bitcoin could quickly drag ETH lower again. But compared to recent sessions, there is at least some evidence that buyers are beginning to test the waters again. And in markets like crypto, sentiment can shift very quickly once traders sense momentum returning. From a technical perspective, Ethereum continues facing major resistance overhead. The price is currently trading around $2,130, while remaining below the 50-day EMA near $2,248, the 100-day EMA near $2,318, and the 200-day EMA around $2,547. That tells us the broader trend still remains bearish in the short term. Momentum indicators also continue reflecting weakness. The MACD histogram remains deeply negative, and the RSI is hovering around the mid-30s, showing that selling pressure is still dominating overall market behavior. However, there is one important detail traders are paying close attention to. The money flow index has now slipped into oversold territory, which suggests downside momentum may be starting to exhaust itself. Historically, these kinds of conditions sometimes create opportunities for sharp corrective bounces, especially when market sentiment suddenly improves. If Ethereum can reclaim the 50-day EMA, many analysts believe it could trigger stronger bullish momentum and potentially reopen the path toward higher resistance zones in the coming weeks. At the same time, XRP is slowly becoming one of the most closely watched altcoins in the market once again. After bouncing from support near $1.35, XRP is now trading around $1.37, while showing signs of growing retail demand. Futures open interest for XRP climbed to approximately $2.93 billion, up noticeably from the previous day. That increase may indicate that retail traders are regaining interest in the asset, despite ongoing market uncertainty. XRP supporters remain highly optimistic because they believe the token still has massive upside potential if overall crypto sentiment improves later this year. And while XRP continues facing technical resistance, many traders are encouraged by the fact that buyers continue defending key support levels rather aggressively. In the crypto market, strong support zones often become launching pads for larger rallies if bullish momentum eventually returns. That is exactly why XRP holders are watching the $1.40 level so closely right now. A clean breakout above that zone could dramatically improve short-term sentiment and potentially attract additional speculative buying activity into the market. However, XRP's technical setup still remains challenging for bulls. The token continues trading below its short-term and medium-term moving averages, with the 50-day EMA near $1.41, acting as immediate resistance. That level also aligns closely with the Bollinger Middle Band, making it an even more important barrier for buyers to overcome. Momentum indicators currently favor the bears, as the MACD histogram remains below zero and the relative strength index continues hovering in the low 40s. This suggests that selling pressure is still active, although not yet completely overwhelming. On the upside, analysts are watching the $1.48 area very carefully, because that zone aligns with both the upper Bollinger Band and the 100-day EMA. If XRP can somehow reclaim those levels, market sentiment could improve significantly. But on the downside, support near $1.35 remains absolutely critical. If sellers break below that floor decisively, the market could quickly shift toward a much deeper correction phase, potentially creating panic among weaker retail holders. One of the most fascinating developments happening right now is how differently traders are approaching Bitcoin, Ethereum, and XRP. Bitcoin appears stuck in a cautious holding pattern as investors wait for macroeconomic clarity. Ethereum is quietly attracting derivatives interest despite technical weakness. And XRP is seeing steady retail participation even while broader sentiment remains uncertain. This divergence tells us something important about the current state of the crypto market. Investors are no longer treating all digital assets exactly the same way. Instead, traders are becoming increasingly selective and strategic about where they place capital. Some investors believe Bitcoin remains the safest long-term bet because of its dominance and institutional adoption. Others think Ethereum has the strongest growth potential due to its ecosystem expansion. And then there are XRP supporters who remain convinced that Ripple's technology and growing retail momentum could eventually push the asset significantly higher. This split in market behavior creates both opportunity and risk, because capital rotation between major cryptocurrencies can happen extremely quickly once momentum shifts. Another key factor influencing crypto sentiment right now is the broader macroeconomic environment. Rising inflation continues putting pressure on financial markets, while geopolitical tensions are creating uncertainty across commodities, equities, and currencies. Investors are becoming increasingly sensitive to every economic data release because they know central banks are watching those numbers closely. If inflation remains stubbornly high, the Fed may have little choice but to maintain tighter monetary policy for longer than markets initially expected. That could create headwinds for risk assets, including cryptocurrencies. On the other hand, if economic conditions begin softening and inflation finally cools down, the Fed could eventually adopt a more dovish tone, which would likely benefit crypto markets significantly. This is why the Fed minutes are so important tonight. Traders are searching for any hint regarding future policy direction, because that information could shape investor expectations for the remainder of the year. In many ways, crypto markets are now deeply connected to macroeconomic narratives, and that relationship continues becoming stronger with every passing month. Despite all the uncertainty, many long-term crypto investors remain surprisingly optimistic. They argue that corrections and consolidation phases are completely normal after major rallies, and that the current environment may simply represent a healthy reset before another expansion cycle begins. Bitcoin supporters continue pointing to institutional adoption trends, growing ETF interest, and long-term scarcity dynamics as reasons for confidence. Ethereum investors remain focused on network upgrades, staking growth, and expanding real-world applications. XRP holders, meanwhile, continue watching retail demand and broader adoption narratives very closely. Even though short-term price action remains volatile, many market participants believe the long-term crypto story is still intact. That optimism is helping prevent panic selling despite recent pullbacks. In previous market cycles, fear often dominated during corrections. But this time, many traders appear more patient and strategic. Of course, patience alone does not guarantee success, but it does show that the crypto market has matured considerably compared to earlier years when emotional trading dominated nearly every major move. What traders really want now is confirmation. They want to see Bitcoin reclaim key resistance levels, Ethereum recover above its major moving averages, and XRP break above $1.40 with strong volume support. Without those confirmations, many investors will remain cautious. But if those breakouts happen alongside a supportive Fed narrative, the market could suddenly shift from defensive to aggressively bullish very quickly. That possibility is exactly why so many traders are glued to their screens right now. The market feels like it is preparing for a major decision point. Volatility has compressed in some areas, positioning remains cautious, and macroeconomic uncertainty continues dominating investor psychology. Historically, environments like this often lead to powerful moves once a catalyst finally arrives. Whether that catalyst becomes bullish or bearish will likely depend heavily on the tone of the Fed minutes and how traders interpret the central bank's future intentions. At the same time, retail investors are still playing a major role in shaping crypto momentum, especially in assets like XRP and Ethereum. Social media activity surrounding XRP has started increasing again as traders speculate about potential breakouts and recovery scenarios. Ethereum communities remain focused on derivatives growth and long-term adoption trends, while Bitcoin investors continue debating whether the recent correction has already found a bottom. This mixture of optimism and caution is creating highly emotional market conditions. Every small move higher sparks excitement, while every rejection at resistance triggers renewed fear. That emotional tension is extremely common during transitional phases in financial markets. Traders know opportunity exists, but they also understand risk remains elevated. This balance between fear and hope is exactly what makes crypto markets so intense and unpredictable. And right now it feels like the next major narrative shift could happen at any moment, depending on what information emerges from the Fed meeting minutes. For short-term traders, the coming sessions could become incredibly important. Bitcoin must continue defending support near $76,800 to maintain its current structure. Ethereum needs to stabilize above the $2,100 zone and ideally reclaim the 50-day EMA to improve momentum. XRP bulls must continue protecting $1.35 while attempting another push toward $1.40. These are the levels traders across the world are watching very closely because they could determine whether crypto markets begin recovering or slide back into deeper correction territory. Technical indicators alone may not provide all the answers, but they still offer valuable clues about market psychology and trader behavior. Combined with macroeconomic developments, these technical levels create the framework for the next major crypto move. As the countdown to the Fed minutes continues, one thing is becoming increasingly clear. The crypto market is entering a critical moment where sentiment, technical structure, and macroeconomic policy are all colliding at the same time. Bitcoin, Ethereum, and XRP are each fighting important battles on their charts, but the broader direction of the market may ultimately depend on how investors interpret the Federal Reserve's message. If traders believe the Fed is becoming less aggressive, crypto assets could see renewed buying momentum very quickly. But if policymakers sound more hawkish than expected, pressure on digital assets may intensify once again. Either way, volatility appears almost guaranteed, and that means traders need to remain alert because the next few days could shape market direction for weeks to come. So right now, all eyes remain on Bitcoin holding above $77,000, Ethereum attempting to regain strength above $2,100, and XRP defending the critical $1.35 support zone. The market is nervous, but at the same time, there are subtle signs that buyers are slowly returning. Futures data, technical setups, and investor sentiment are all showing mixed signals, which usually means the market is preparing for a decisive move. Whether that move becomes the start of a major recovery rally or another leg lower will likely depend on the Federal Reserve's tone and how traders react afterward. One thing is certain, though. Crypto markets are once again entering one of those moments where everything can change very quickly, and traders everywhere know that the next headline could spark massive volatility across Bitcoin, Ethereum, XRP, and the entire digital asset market.